Okay, let's jump straight into a question that I know has crossed my mind lately, and maybe yours too. Considering the market's ups and downs, is now the moment to invest in Amazon or Costco?
Yeah, and here's a fascinating angle. Recent market behavior might be suggesting an answer you wouldn't immediately expect.
What's really grabbing my attention is this distinct performance difference we've seen this year.
Exactly. We're looking at a recent analysis from the Motley Fool, published just yesterday, April 25th, 2025. And it really digs into Amazon and Costco as potential stock picks.
And the contrast in their year-to-date performance in 2025 is quite striking, isn't it?
It really is.
You've got Amazon, this, behemoth we're used to seeing dominate. It's actually down by over 20% so far this year.
And that's playing out against broader market headwinds, too.
Right, and we're even seeing reports, I think, from Wells Fargo analysts about Amazon apparently hitting pause on some of its data center lease expansions.
Yeah, I saw that. That's not the typical news cycle for them, is it?
No, definitely not. Could that signal maybe a broader strategic rethink, or is it more likely just, a reaction to the current economic climate?
That's a really crucial question to consider. It certainly reflects some of the economic uncertainties we're navigating right now.
Sure.
Now, on the other side of the coin, Costco's story is, well, remarkably different.
It is. Their stock is up around 7% this year.
Right, building on that strong momentum we saw from them back in early 2024.
So you have one giant facing headwinds, the other seemingly weathering the storm much better.
Pretty much sums it up.
Which brings us, I think, to the heart of our discussion today. Our goal in this deep dive is to really unpack the core insights from this Motley Fool analysis.
And understand why the answer to whether Amazon or Costco is the smarter investment right now might just surprise you.
Exactly. Let's start with Costco's clear resilience.
Okay. What fundamental aspects of their business are letting them outperform, in the face of these broader market jitters?
Well, the article points to a fairly fundamental reason. Costco's underlying business model just tends to be less sensitive to economic downturns. Think about your own spending when things get tight. You're probably still looking for value on everyday necessities, right?
Absolutely. And that's where Costco really shines. Their membership model fosters that customer loyalty.
Yeah.
And the perception of value, for bulk purchases, that often increases during economic uncertainty.
That makes sense.
It's also worth looking at their approach to tariffs, which have been a big concern for a lot of businesses.
Right. The tariffs, how have they handled that?
Well, Costco isn't completely immune, obviously. About a third of their U.S. sales come from imported goods.
Okay.
But they've strategically managed their sourcing. Less than half of those imports are actually coming from China, Canada, and Mexico.
Ah, so the regions hit hardest by the highest Trump administration tariffs.
Precisely. Which suggests, a proactive strategy to minimize the impact on their members' wallets.
Right. They've been strategic in their sourcing. And it's not just about where the goods come from, is it?
No, it's also about their messaging and focus.
Because the article highlights that statement from CEO Ron Vekris back in the March 2025 earnings call.
Oh, yeah, the one about uncertain times.
Yeah, he said something like, in uncertain times, our members have historically placed even greater importance on the value of high-quality items at great prices.
And that really underscores the core appeal of Costco, especially right now, doesn't it?
It totally does.
This definitely reinforces that investor perception of Costco as a relative safe haven during market volatility.
A safe haven, yeah. There's a sense of stability there, consistent value, reliable membership revenue, especially when other parts of the economy feel less predictable.
Agreed.
Okay, so Costco is definitely showing considerable strength in the current environment. But what about the bigger picture? Let's maybe pivot now and explore why the article still leans towards Amazon as the potentially stronger long-term bet.
Okay, yeah. This raises a critical question about future growth trajectories. Because while the present climate might favor Costco's stability, the article posits that Amazon possesses significantly greater potential for long-term growth.
And even the recent sales figures, which seemed kind of close, offer a hint of this.
They do. Amazon's sales saw a 10% year-over-year jump in their latest quarter. Costco's was what, 9.1%?
Yeah, 9.1%. Close. But Amazon edged them out slightly there.
But the real divergence, it seems, lies in their earnings growth.
Wow, yeah. Amazon's earnings nearly doubled in the first quarter, hit a huge $20 billion.
Right. Whereas Costco's net income saw a much more modest increase, only 2.6%.
That's a massive difference in profitability momentum.
It really is. And Wall Street's forecasts for the coming year, they emphasize this expected divergence even more.
What are they projecting?
Analysts are looking at Amazon's earnings potentially surging by 19.6%.
Almost 20%, okay.
While Costco's are anticipated to grow by around 10.7%. Still good, but, not nearly the same pace.
So the article's point is that Amazon just has more levers to pull for profit.
Exactly. More levers and greater optionality, meaning just more diverse pathways for future expansion.
And those potential growth avenues for Amazon are, well, they're genuinely compelling, aren't they? The article specifically highlights AI.
Yeah, artificial intelligence as a major future catalyst.
Which makes total sense given their massive cloud infrastructure with AWS and all their ongoing investments in AI tech. But how might AI specifically translate into, actual profit for them?
Well, that's a great point. It's not just a buzzword, right? Think about how sophisticated AI algorithms can optimize their enormous supply chain.
Okay, efficiency gains.
Big time. And personalized product recommendations, which should lead to higher sales conversions.
Sure.
And power the next generation of their Amazon Web Services offerings.
Yeah.
That alone could create significant new revenue streams.
Right. AWS is huge already.
And beyond AI, you've got their expansion into healthcare, another potentially enormous market.
And we can't forget their ownership of Zoox, right? Their bet on the robotaxi market.
That's right. If that scales successfully, that could be completely transformative.
Totally. Plus, there's Project Kuiper, their big initiative for global satellite internet.
Yeah, that's some serious long-term, high-growth ambition that really extends far beyond traditional retail.
Much further than Costco's focus, which is primarily the retail warehouse model.
Exactly. Costco just isn't positioned to capitalize on those kinds of opportunities to the same degree.
And this leads us to what the article calls the surprising clincher.
Ah, yes, the valuation piece.
This is where the analysis takes a really interesting turn, I thought, because for so long, Amazon was seen as this, ridiculously expensive stock.
Always expensive, yeah, but it just kept going up.
Right. But now the argument is that relative to Costco, Amazon actually appears to be trading at a more attractive price.
Exactly. The forward price-to-earnings ratio gives a pretty compelling insight here.
So what are the numbers?
Amazon's currently sitting at around 26.2.
Okay, 26.2. Still feels like a decent multiple on its own.
It does. But then you look at Costco's forward PE, it's significantly higher. Around 54.4.
Wow, 54.4. That's more than double Amazon.
Yeah, that much higher PE for Costco suggests investors are currently paying a much larger premium for its earnings, probably due to its perceived lower risk and stability right now.
Okay.
So the argument the article's making here is that Amazon's lower PE, especially when you combine it with its much higher anticipated earnings growth, makes it a potentially more compelling value proposition for future returns.
So the core reasoning is basically Amazon's future growth prospects, they can probably justify its current valuation. Costco's prospects, despite its present stability, maybe not so much, not at that higher multiple.
That's the essence of it. It's a pretty strong conclusion, really.
It is. And to be fair, the article does acknowledge that in the short term, Costco's steady performance could very well continue.
Oh, absolutely. It could keep delivering solid gains, especially if these economic uncertainties persist for a while.
But the ultimate takeaway, the bottom line from this Motley Fool analysis, seems to be that for investors with a longer-term horizon, say the next decade and beyond, Amazon is positioned to be the more significant wealth creator, the bigger winner over time.
So just to recap our deep dive then, we've seen that Costco's business model, it offers this robust defense during economic headwinds, right? And its stock performance reflects that stability.
Definitely.
However, Amazon's potential for really substantial long-term growth across a whole diverse range of innovative sectors.
AI, healthcare, Zoox, Kuiper.
Exactly. That potential, coupled with its surprisingly more attractive valuation right now compared to Costco.
Yeah, that lower PE ratio.
Makes it the potentially more rewarding investment for the future, at least according to this analysis.
Which leads us to maybe a final thought for you, the listener, to consider. Taking all these insights into account, Costco's current resilience versus Amazon's long-term growth potential and that relative valuation difference. How might your personal investment strategy, and maybe just as importantly, the time frame you're considering, influence whether Amazon or Costco aligns better with your individual financial goals right now?
Yeah, that's the key question, isn't it? It's definitely worth digging deeper into these factors yourself, like the ongoing impact of tariffs, the future path of AI, the specific growth initiatives each company is really pursuing.
As you make your own investment decisions. Something to mull over.